Okay, hello and welcome to episode 8 of my technical bootcamp. Today, we are going to be talking about momentum. So momentum is a concept that is incredibly useful and no one ever really talks about it. It's how we read the battle between buying and selling inside of the candlesticks, okay? So in this class, you're going to learn how to do that, why candlesticks give you invaluable information that you were probably missing before, and how you can use this understanding of momentum to read markets deeper and have more clarity around the positions you're looking to take. So today we're focusing on individual candle momentum. And with that said, let's head over to the charts and make that happen. Okay, momentum. So in this class, we're going to talk about momentum on an individual candle basis. And what I want to do really is get you thinking about what these candles are actually showing us. All right. So for reference, a candlestick is made up of two parts. We have bodies and we have wicks. The body is the main block part, and the wicks are the little sticks that come off either side. Now, these show confirmed and rejected price action within a given time frame. All right. So if we're focusing, let's call them hourly candles. That means that basically one candle, so all of this, is showing us price movements that have been created within 1 hour. Okay. And the candle body has an open price and a close price. The open price is where the market was when the hour began. The close price is where the market was when the hour ended and the new hour began. So this shows confirmed price because it shows the confirmed piece of movement that the market made, or the price change that the market made between the start and the end of the same hour. The wicks show rejected price. So these things here, because what these show is attempted price movements, basically price levels that the market went to, but then was pushed back from and didn't manage to close out. So when we see wicks like the ones we've just covered, all that means is at some point the market attempted to go this high and was rejected. And it also means at some point within this same hour, the market actually went down here. So for a phase, it was a bearish candle before we saw a pushback and a close up here. So we're going to do a little exercise. And what we're going to do is break down what this candle would look like as an actual standalone piece of price action. All right. This is obviously a really good way to visualize what candlesticks are actually showing us, because this is truly what it is when you scale down to a more refined view of it. So rather than looking at candlesticks as just a pattern, right? So when you look at a candlestick chart and you see these, rather than just looking at it as an arbitrary pattern, you want to read into what the candlestick there is actually telling you and what it's showing you if you were to really consider the battle between buyers and sellers that's taking place behind the candle. So for a candle like this, with an open price here, a close price here, and a small wick above and below, if we were to refine that to a standalone piece of price action, tick by tick, it would look pretty much like this. We would have our open price, and then the market traded a little bit lower. And then we saw rejections from buyers all the way up to here. And then we see a bit of exhaustion at the top before we close here. Now, if you take a look at that, that obviously looks like a very bullish market and something we would be happy to buy into, because it shows a little bit of seller attempt to go lower and then clear buyer control all the way throughout the candle, and then a small bit of exhaustion and a close considerably higher than where we opened. Now, that is literally what this candle is showing us if we were to look at it tick by tick. That is what it is, okay? Obviously, this next candle is a bearish candle, meaning the open price is higher than the close price. So within this 1 hour of price action, the market actually traded lower. And to visualize this one, it's simply an open price here, an attempt to go higher, and then a rejection, which brings us all the way down here, and then a little bit of alleviation at the end to close us around here. Again, obviously, when we visualize it in this way, it looks like a reasonably bearish market, something we would be focused on selling into. Now, all candlesticks can be read in this same way, because what candlesticks are just a compressed version of the tick by tick price action that we've just explained, okay? So when you start to read and understand candles in this manner, you can derive a lot of information from them, right? So just to quickly clarify before we move into talking about how to read this momentum and the different types of candles that we can actually identify in a market. A bullish candle will have an open price lower than the close price, and that just shows confirmed bullish price action within that time frame. A bearish candle will open here, and at the end of the hour, or whatever specified period of time it is, will close considerably lower with basically confirmed downward price action. And then the wicks give us different information depending on the size and which side has larger size and smaller size and all of the above, okay? So that is how candlesticks work. That's what they look like. They're made up of bodies, wicks, open and close prices, and they give you that confirmed and rejected information. Now, when it comes to reading the momentum from these candles, there are really only two types of candles. there are low momentum candles and there are high momentum candles. A low momentum candle is a candle that really doesn't show too much price action or too much movement. So it can be a candle like this where nothing really happened at all, or it can be a candle that kind of has some movement but doesn't end up creating directional flow. Okay, so it goes up, it goes down, but it closes pretty much around where it opened. A high momentum candle is just like what we've been looking at, where we have kind of uninterrupted buyer control or uninterrupted seller control within that given time frame. And what this shows us is that there is a lot of momentum behind the selling in this example and a lot of momentum behind the buying in this example. And when we say the word momentum, what we're really saying is buying or selling control. Okay, so a low momentum candle shows no control. High momentum candle is either showing control from buyers or control from sellers. So that is really at the core what we're talking about when we say momentum. Now, let's talk about then how these candlesticks can actually indicate high or low momentum. And for this, we're going to remove the bearish one for now, and we're going to focus on the bullish one. There's a few ways that we can derive this low or high momentum information from candles. First off, through candle bodies. And really, when it comes to an isolated individual candle, the pure way that we determine the momentum of the candle from the body is simply the size, okay? So a candle body like this, which is rather large, and we have small wicks and a large candle body, indicates high momentum. It's a phase of clear buyer control, as we've just discussed, because it's showing us price action like this. If we were to have a small candle body, so let's say like this, well, the candle body itself has only opened here and closed here. So if we were to, for a moment, disregard the wicks, all this is showing is basically a bit of price action like this. So that's low momentum, right? Doesn't show clear control from buying, doesn't show clear control on the side of selling either. Now, we can even get candle bodies that are so small that they look like that. And obviously this is basically just a flat line if we were to disregard the wicks for now. So this shows we open there, we close there, no ground was covered. Therefore, this is a low momentum candle. So the bigger the candle, the higher the momentum generally in terms of candle bodies, okay? So we derive candle body information from purely the size of the candle. Now, candle bodies, of course, are not the only thing that matter. We also want to consider the wicks. Now, wicks are a little bit more nuanced. Generally, we can derive from wicks information from the size, but also the context. So the candle bodies are a lot more simple and confined. If a candle body is big, momentum is high. If it's small, momentum is low. But wicks are a little bit more nuanced because the context around maybe which side of the candle has a large wick or whether either side of the candle has a large wick, this basically gives us extra context, which can give us kind of information on the momentum in a market in a different, more nuanced way. All right. So let's say then that we have the exact same candle body with an open price here and a closed price here, except in this example, we have a wick that's very big at the top. So what is this showing us? Well, let's visualize it real quick. We've got our open price, a little bit of downside for the lower wick. Then we have very uninterrupted clear upside. But when we reach the top, we have a big drive back down and then we close around here. Well, this candle suddenly tells us a slightly different picture to what we were seeing before, because this candle is showing that although the buyers were in control, we've definitely seen some control from sellers coming in at the top because we've reversed around 50% of the movement that was made by the buyers initially. So if we focus in on the candle, what this is showing is open buyer control pretty much all the way throughout. But then some point up here, we saw sellers kicking in with massive selling pressure, and they drove the market all the way back down to this level. So we have to basically be aware of this selling pressure that's commenced here and try and read into the information that might give us. Now, in a candle like this, where the candle body is still very large and the close price is a lot higher than the open price, it is still a bullish candle. But if this was happening at a potential point of interest like a supply zone or an area of interest where a market could be beginning to reverse, then we could actually use this as a cautionary sign to maybe not rush into trades on the buy side, because we may potentially be at a reversal point in the market where selling pressure is coming in. And at the minimum, we just have to consider that there are sellers up here that are willing to push back at the buying and drive this market a lot lower. Because at one point in time, the candle looked like this, but with a rejection this big, we definitely have to consider the implication of what took place up here to bring this candle all the way back down, okay? So now let's take a look at a different example using the same candle. What if then the candle body was the same again, but this time we had a small wick at the top and a large wick at the bottom? Well, now this one is more favorable of clear buying control. What this candle looks like, it opens here, it trades lower, gets down to this point. So at this point, it's looking like a very bearish candle, but some point here, we see clear buying control take over, which drives us all the way up to here. This tells obviously pretty much the opposite story as before, where before we saw considerable selling pressure coming in and driving back against the buyers. This time we already saw the selling pressure at the beginning, and we had a pretty notable downward move. In fact, a very large downward move, about the same size as the candle that's closed. But at some point down there, so after the selling pressure, in this area, we saw notable levels of buying pressure coming into the market, which not only drove the market back to the open price, but drove us all the way past the open price and all the way up to here before closing, with again little to no wick at the top. This wick is tiny, showing buyers were not pressed down by sellers at the top. Basically, this is a incredibly bullish situation because not only have we closed considerably higher than we opened, we've also seen a huge rejection from buyers after an attempt to go notably lower. So this would be pretty much the ultimate in the ways of what we want to see for bullish candles, right? It shows attempt to go lower and then a massive influx of buying, which drives us all the way up to close considerably higher than we opened. Basically, when we read this candle, we see information that buying pressure is very well alive in this market and has followed the market up to continually push this higher until we close with a lot of momentum and pretty much no pushback from the sellers. All right. Now, let's pair candle wicks with smaller candle bodies then. Well, if we were to see this setup, so we have the open price and the close price reasonably close together, but a huge wick either side. This shows us that we have opened here, we've attempted to go considerably lower, we've attempted to go considerably higher, and then we've come back down and we've closed here. So realistically, if we were to average out this range, we haven't made a whole lot of ground at all. We're pretty much ranging. We see an attempt to go higher, an attempt to go lower, but these movements are both completely rejected, which basically only tells us that this is a phase of indecision and there is no clear buying or selling intent or control in this market, okay? So we call this an indecision candle, right? So it does factor in the fact that the candle body is small. If the candle body was like this big, we would see, of course, at this point that, well, buyers are somewhat in control. If the candle body was this big to the downside, we'd see that, okay, sellers have made ground. But when we have these small candle bodies and large wicks either side of around equal size or similar, that shows basically a phase of, no clear intent from buying or selling parties. Now, if we were to have then the same candle body, but instead of a large wick either side, we only have a large wick beneath, well, this changes the story slightly. This shows that we opened here, we tried to go lower, and then we pushed back, but we still closed where we opened. So this isn't a clear buying intent candle just yet, but it definitely shows willingness to go higher because it shows selling pressure was wiped out down here by considerable buying pressure, and the market managed to get back up to around where it opened. So what we can derive from this kind of candle is that this could be potential foreshadowing of a reversal. So this is a potential reversal candle, okay? Now it doesn't confirm that just yet, but it gives us the first signs that, well, we're starting to see a shift in control from selling parties to buying parties, and we are managing to close slightly higher. Now, we will note on this one that really, even if the candle body was this big, it's showing the same thing, okay? It's still showing a clear attempt to go lower, taken over by a clear attempt to go higher, but we still close around the open price. So whether we closed, here, exactly where we opened, tiny bit lower, or around this point, it doesn't really matter. All of these candles give us the same bit of information, all right? That potentially we should definitely be cautious for a reversal coming into this market because we've started to see that candle shifting with notable buying pressure coming in here. And the same exact thing would go for this candle if we were to have an upper wick that was very big and a lower wick that was very small or not there at all. This shows basically we've entered the market here, we've pushed all the way up here, but we pulled all the way. This pretty much shows that we entered the market here, we attempted to move higher, and then we saw a rejection back down towards this point, which pretty much gives us indication that this could be the first point where a market is potentially leading into a reversal. Okay, so again, at this point in time, not confirmed, but when we read into the selling pressure coming in mass at this high, and the fact that this candle once looked like this and now looks like this, we're definitely seeing there clear rejections, clear selling pressure coming in, which could lead us into a potential bearish scenario. Now, an additional point on the topic of high momentum candles, we obviously talked about how the candle body size determines how strong the momentum is also the wicks, okay? So wicks obviously show rejections. Now, in a market like this, where we only have a little wick on the downside, and then we have only a little wick on the upside, we are pretty much seeing uninterrupted buyer control. Now, the larger the wick gets on the side that the market is moving, so in a bullish example, then the more notice we have to put to this. Like this, we're obviously seeing buyer control, but we have seen a bit more of a larger pullback, okay? If we were to have a larger wick, as we've said, this is where we start to consider possibility of, reversals maybe, because we have seen quite a reasonable amount of downside come out of the rejections that the selling pressure has created up here. So when it comes to large size candle bodies, we should still consider the size of the wick, because the wick will give us information as to whether there's any cause for concern about potential reversals or not. Now, in a case where we have a candle body that's got no wick, this is the cleanest thing we can see to back a bias in this direction. So in a bullish candle, if we've got a little lower wick and then we have an impulse like this, which literally doesn't reverse at all, this is basically showing that from this point through to where we are, right into the exact current moment where the candle closed, we have direct, very clear, strong buying pressure. So from these situations, we can actually see direct continuations in a higher frequency basically than any other pattern that's printed in the market. If we see a candle close like this, it's reasonably likely that the next candle starts and runs in just the same way, because with no wick, we're basically seeing no pushback from sellers. So we have clean room for continuation for buyers. All right. So that's basically what we see there when we have these uninterrupted candles with little to no wick. But it's always worth considering basically the size of the wick above and below the candles. If you've got a large candle body, but you've got a massive wick as well, this is actually a point where reversals could be coming in. If you've got a large candle body with a little wick or no wick, then that is the strongest possible bias you can get behind clear domination basically of the market direction. Okay, just a quick interruption from the bootcamp for a second. What you're learning here in this bootcamp about technical analysis is necessary to become a good trader, but technicals alone are not sufficient to get you to where you want to go. See, it's usually not the things that you see on the charts that actually have you stuck. Traders get stuck because of habits, risk behavior, decision-making under pressure, and self-sabotage patterns that form that simply don't show up on the charts. So I've created a small and easy to digest class. It's around 15 minutes long and it breaks down all of the reasons that you're losing and struggling to win that you probably just haven't seen yet. Once you've completed this class, head over to the link in the description, click the top link and you'll be able to watch this class. It's totally free and it might change the game for you. So let's go back to the bootcamp. All right, so what we're going to do is go through some individual candles and we're going to read these in the context of a market. Okay, now I'm going to preface by saying this is not how you should look to trade the markets. You should not trade based off of individual candles, but you're going to see how what we've just been through and broken down actually correlates into what we see in the markets and the information we can get. So if we look at this chart, we can see initially we have strong uninterrupted bullish buying candles. It's looking pretty good. We have some here as well, but we do start to see some pushback basically in this price area here, where we have some pretty strong bearish candles. Okay, so candle bodies wise, this is obviously primarily bullish, but when we start to see this pushback, it's first sign that maybe we watch up in the point where the selling pressure began, which is pretty much at this high just here. And we watch this in the future because if we see more selling pressure commencing, this could be potential first signs of a reversal. Okay, so what are we reading from this candle? Well, we see this candle here, this gray one, we opened, we traded considerably higher, then we traded considerably lower, and we closed. The next candle, we opened, we tried to go higher, tried to go lower, and closed. The next candle was a small attempt to go higher, and then a large push to the downside, right? And that's this candle here. So basically, this series of candles has indicated that somewhere up here, or correlating that to the chart, up here, we have seen the tide shift. We've seen selling pressure come in force and bring the market down. Now, when we see the market start returning up to that level, so this drive higher like so, what we're actually seeing here is again, more rejections coming in. These upper wicks on these candles is large. And when we get to here, we have a massive upper candle. So if we visualize that, it looks like this. We open here, we attempt to go a little lower, we attempt to go considerably higher, and then we reject and reverse, and we end up closing about here. So again, we're seeing at this point, or this point, we are seeing those rejections. We're seeing the market coming back down. We failed to get a candle body closure anywhere in this range, showing basically all we get at that price level. So above, call it 1.174, anything we get above there is only rejections. We're not getting any solid closures that's going to give us confidence to buy. Let's take a look then at the next candles that form. We start to see more rejections again, okay? So we get small push above, but more rejections. And then the market comes down and creates these incredibly strong bearish candles. So remember how we said, when we start to see these big wicks and we start to see selling pressure commencing at one price level, this creates first indication of potential reversal. Well, there that is. We saw that and it foreshadowed the move that follows. Now that we have this strong bearish move, we obviously understand that selling is now controlling the market. We have a seller-dominated market. Unless we were to see a very quick snap back by very strong bullish candles, we would therefore anticipate that this market is more likely to continue trading lower. Given the new direction that's been created, what we've done is we've ended this direction with selling pressure and created a new direction. Okay, so we can watch the next candles. Really at this point, we're not seeing too much. What do we see? A pullback here, reasonably sized impulsive bullish candle, but immediately followed by more selling pressure and more indecision. Okay, now we've had another push to the upside, but as soon as we finish that bullish move, again, we get more selling pressure, more indecision, and then a bearish close pushing us back down. So we are seeing here buyers are not cleanly in control. Okay, even though they've had their small pushback, every bullish candle is followed by another bearish one that is creating indecision and removing decisiveness from the market and driving us back lower. Now this candle just here, this gray one, this is a very strong bearish candle. You see from the open to the close, there is pretty much no rejection, which shows clear, uninterrupted seller control in this market. Okay, this helps to back the idea that the market should continue to trade lower. We then have indecision, slow buyer control. See, these candle bodies are much smaller. And then again, after indecision, we continue and trade even lower. And we just continue moving in that fashion. So you can see that what we gain from reading individual candles is, number one, areas where markets are kind of reversing. Number two, areas where markets are clearly buyer or seller dominated. And then number three, we can even gauge full-blown reversals from them in a sharper fashion, kind of like what we've just seen with these two candles. If you take a look at this, we have a significant bearish candle, which would lead us to believe continued selling is likely. But immediately following that, we get a very strong bullish candle, which obviously gives us an idea that maybe this point here, although it's not a wick, is showing the same kind of thing as a wick rejection would, right? If we visualize what we are seeing in this price area, we are basically seeing the market open around this point, trade a little higher, trade a lot lower, and then reject all the way back up, and this is crossing over to the blue candle now, closing us there. So this kind of two pattern candle formation shows pretty much the same as what a wick rejection would show us. That is then followed by a small rejection lower, okay, with the following blue candle, this one, and then a large drive higher, which at this point in time pretty much looks like this, and we close just here. So this is giving us first indication that maybe the market could be moving higher. If we take a look at what comes next, we have indecision, right? Note the buying pressure that we see coming in down here. So we have some selling pressure pushing the market down, but then we close higher than that, indicating these sellers are not strong enough to cap price. When we attempted to go lower, we saw buying pressure, indicating that sellers are not strong enough to keep this market down. And although we now start to see some bearish candles that could maybe indicate some downside, they are pretty immediately followed by these candles here, which again, what are these showing? These are showing significant buying pressure entering the market basically at this level and at the following wick as well. So these 2 points show very strong buying pressure entering the market. Okay, that point upwards, every bit of price action that came down here essentially foreshadowed by the initial wick, which saw buying pressure coming in at that level there. And now from this range, we've built enough buying pressure to send the market back into uninterrupted buying candles with little to no wick at the top. See what follows from there? It's just more continued buying, okay? So there we go. We've made some sense of the market by reading individual candles. Now, of course, when we are trading, we're not going to look at every single candle and try and read the full story of every single candle that prints in this format in order to take trades. But what we can do is use them to kind of see potential areas where maybe the market is shifting direction or clear areas where the market will not be shifting direction because the control and domination from buyers or sellers is just so prominent at one time. So that is how we read individual candles. Now, do not trade based off of this information as it stands alone. When we get into multi-candle momentum, you'll see how we bring these individual pieces into a larger context to actually create narratives around the market, reading the momentum. So we can identify those kind of points of control and points of reversal and points of indecision with more clarity. The next class is all about that. We'll be diving deep into it. And for now, this is everything you need to go and study this week. So what I want you to do is head over to your chart, choose a random piece of price action, and go candle by candle in the way that we just did to identify areas of selling pressure, areas of buying pressure, and try to make sense of what is likely to happen next. Remember, you don't have to formulate trades with it. You don't have to find the perfect entry with it. You just need to have an understanding of which direction the market is likely to go next based on what has just occurred. Such as when we prepped this downward move, we said the most likely outcome from here, due to the indecision we have on the pushback up, is a selling move, okay? I want you to go to a random point on a chart and do that, identify it, and you'll start to see how you read the story behind the candlesticks themselves. And from there, we'll move on to multi-candle momentum in the next episode. So thank you for watching. Hit the link in the description to watch the trading diagnosis class, which is going to fix the issues that you don't see on the charts that are holding you back from success. And with that, I will see you in the next episode.